Let me ask you about the potential of a debt bomb, because that's really what you're alluding to, right? At the point where interest servicing costs become so high that it blows up the economy. Are we close? Because we're paying now over $100 billion a month in interest servicing costs.
Yeah, and interest payments are larger expense than now national security and defense. We're not yet there, but I would say that regardless of who's going to be elected, we're going to have larger deficits, more under Trump than Harris. Two, neither Harris nor Trump want to touch entitlements because it's toxic. But eventually, I would say, whoever's going to be the falling president after 2028, that issue is going to come up because by 2030, 32, the trust fund of Social Security is going to run out of money. So we'll be forced to do something about it. And I think that probably over the next few years, we're going to realize the deficits are going to remain large because neither side wants touch entitlements, and there'll be significant tax cuts under either administration or more spending, and that eventually the twin fiscal and current account deficit in a world in which geopolitics implies that our rivals want to move away from dollar assets, going to gold and other stuff, implies less demand by foreign central banks, less demand by the Fed that is doing QT, and increasingly domestic and foreign private investors are going to say deals of 4% is too risky. So we'll have a trigger point. I don't think it's going to happen in the next 12 months, but suppose that Trump is elected and he says, seriously, I want to do these deficits, I think the bond market is going to react. It's going to react by having yields going higher.
So the vigilantes will come back?
I think they will come back soon, especially if he's elected. And they may actually force him not to do what he wants to do, because market discipline is going to become active.